What's up, stackers? Welcome back to the Daily Stack Report. If you like daily precious metals updates with real numbers and real catalyst, hit subscribe and tap the bell because the market is moving fast and I don't want you missing the next setup. Today's scoreboard: gold steadies, silver whipsaws. Let's set the tone. Gold spot closed around 4,596, while February gold futures closed around 4,601. That's basically a tight spread day. Futures slightly moved above spot, which is typical because of financing and storage. Silver is where we get spicy. Silver spot closed near 90.14, while silver futures closed around 88.54, and that's from investing.com. When spot is running above futures like that, it's not just price action. That means the market's whispering. Near-term demand is aggressive and immediate supply is being paid up for. So here's the question. Is this just post all-time high volatility, or are we seeing real tightness underneath the hood? Now, why did gold cool off today even though the big picture is still looking strong? One of the main drivers was stronger than expected U.S. data, which boosted the U.S. dollar and made traders less confident in near-term Fed cuts. That combination tends to pressure metals short-term because a stronger dollar makes dollar-priced metals more expensive for non-U.S. buyers, and fewer/later rate cuts can lift real yields expectations, and metals compete with yield. Remember that, guys. Reuters had spot gold around 4,604 early in the day and noted it's still on pace for a strong week after hitting a record high earlier this week. Translation: gold didn't break, gold took a breather because the dollar got a little swagger back today. Silver: why it can drop hard and still be bullish. Numismatic friendly explanation. Now let's talk silver, because silver is not gold's quiet little cousin. Silver is a hybrid metal, part monetary, part industrial, and part speculative momentum. Reuters noted silver was down on the day and referenced how violently it has been moving after recently tagging record levels. That tracks with what you felt if you watched the tape. Silver can move like a tech stock, but it also is physical. It's also coin demand. It's also industrial pull. Here's a key point I want you to stay like a pro. In silver, volatility isn't a bug, it's a feature. And if you're a stacker, you don't just watch the price, you watch what prices do to premiums. When silver spikes, retail often gets choked by supply constraints, and that's when generics rounds detach, government coins detach, and the premiums become the real price. So if silver stays above $90 spot, do you expect premiums to cool off, or do you think the retail side stays tight? Let me know in the comments. Futures versus spot. Let me give you a fast finance major breakdown without making it boring. Just kind of like a consumer breakdown. Gold. Futures close tightly, slightly above spot, which is normal contango. That usually says market is liquid, carry costs are priced in, no immediate shortage signal. Silver. Silver spot closed above futures, which is called backwardation. That can signal the near-term metal is getting bid hard, which fits the narrative of tight flows and urgency in the physical market. If you want a one-liner, here it is. Gold is acting like a reserve asset. Silver is acting like a squeeze-prone asset. Two totally different things. So here's the good. Here's your bull case for the week going into next week. The weekly trend is still strong. Even with today's pullback, the broader move has been powerful, and mainstream coverage is starting to emphasize just how intense the rally has been. Gold is still trading near record territory this week, which tells you demand hasn't vanished, it's reacting to macro headlines. And then here's the bad. Dollar strength plus rate cut uncertainty can hit metals quickly because metals are crowded trades when momentum is hot. Geopolitical cooling headlines can reduce safe haven urgency in the short run, not the long run. Silver's volatility is a double-edged sword. It creates opportunity, but it can also shake weak hands out really fast. Quick pause, guys. If this breakdown is helpful, drop a comment. Are you stacking silver, gold, or both right now? Have you been playing the gold to silver ratio? I read everyone's comment, and it helps me tailor tomorrow's report. So here's what I'm watching for. Going into next session, which is next week, and remember, guys, we have Monday off, so we'll be starting on Tuesday, well, technically Monday night. So here's what matters. Does gold hold the $4,600 handle? Even if it chops, staying near these levels is a statement. Does silver stay in tight, urgent structure where spot is elevated? If it does, the physical side might stay stressful, and that's what premiums can get weird. Does the market keep repricing Fed expectations? Because that's been a big lever on the dollar, and the dollar has been the lever on metals. So here's the bottom line. Even with today's volatility, the metals complex is still acting like something bigger is going on. Gold is holding near record territory, silver is moving like a coiled spring, and the market is reacting to every macro headline like it matters, because right now it does. So guys, if you want daily market level updates plus stacker level strategy, subscribe to the Daily Stack Report and tell me in the comments. If silver dips again, are you buying the dip or waiting for confirmation? As always, guys, stay safe, stack smart, and I'll see you tomorrow.